Hello, everyone. Hello, everyone. It's nice to have you here. I don't know if everyone can hear me. I just want to do a quick mic check to be sure that people can hear me. If you can hear me, kindly just put into the chat box that you can hear me.
Yes.
Can you hear me, Ronke? Excellent.
Loud and clear.
Okay, excellent. I can see thumbs up. Thank you very much for confirming. Everyone, welcome to this webinar. I can see a lot of people have joined. It's nice to have everyone here. It's nice to have everyone. Thank you for the thumbs up. Nice to everyone. Maybe we should give people 1 more minute and then we are off until while we're here today.
Yes.
Okay, the time is 11:02, and I think it's best to start because I know most of you are very busy. So that we don't waste time, because the plan is to do this webinar in just 1 hour, and I know most of you have taken time off your busy schedule to be here, so that we don't waste any of your time. So it's better to start off as it is. Once again, good morning, everyone. Good morning, everyone. Welcome to this webinar. This webinar is about the 2025 Tax Act. And what we want to achieve in this business, in this webinar, is to explain without no technical, all those technical jargons, you understand, to explain what every business owner needs to know. Those things that you need to know about the new Tax Act, what is changing, what it means for your business, how you will stay or get ready for compliance for 2026. I'll be showing those practical steps you need to take, and from the administration, registration to all issues around digital invoicing in this webinar. But before we start, it's important that we have a bit of house rule to start with. First, understand that you are in a listen-only mode. It's not by mistake. The idea is that we don't interrupt the webinar. If there's any question you want to ask, kindly put it in the chat box. My partner that is on this call with me will take note of those questions, and those questions will be answered either in the chat box or I'll answer them live. By the way we have designed the webinar, we think by the time we end the webinar, most of the questions will have been answered. They may not need for it, but we still allow you to put in the questions in the chat box. And by the time we finish presentation, we will ensure that all the questions are answered. Like I said when we started, the idea is to keep this webinar to 1 hour max, so that you can go back to whatever you are doing and your businesses. However, at the end of the webinar, there will be recording of the webinar will be shared with you. It's going to be on demand on our website. You can actually go back, review, watch, and listen to most of the things that will be said in this webinar. And you can also share the recordings with other people that may want to benefit from it. Hopefully you stay to the end of this webinar. We'll be sharing resources and we'll be giving some freebies at the end of this webinar. So let's get on to it. Before I start, it's important that I do a bit of introduction of myself. My name is Bayode Agbi. I'm a chartered accountant and also a chartered tax practitioner. I run an accounting firm called Agbi Bayode Co. It's a chartered accountant firm and tax practitioner. We are members of the NTAA, an International Association of Independent Chartered Accountants in well over 70 countries. Now, one of the things that we have been doing in Pillarcraft for the last decade is that we provide outsourced accounting services to medium and small businesses. Basically, what that means is that we provide entire accounting units, which is bookkeeping, accounting, payroll, and monthly compliance to businesses that don't want to have an in-house resources or want us to train their business and their in-house finance team on how to do those things very well. Because we have some special area that we are special in. And then we also help businesses to implement cloud solutions. We implement, we source, we explain, train, and also support business in doing this. And over the years, we've kind of found a middle ground where we bring together technology and accounting. And based on that, our experience, we also went ahead to build our own accounting software called Usawa. It's a cloud accounting software that is built for businesses in Nigeria, with the experiences we have had being the #1 zero cloud accounting software partner in Nigeria. We built it with that background, but we did localize, should I say, experiences and the need for our market. And in fact, it's also being paid for in Naira, not in any way dollar. I must also emphasize that it is an accounting software, not an invoice management software. An accounting software is built to do everything that will give a business owner a good overview of their business, including invoicing, payables, receivables, inventory, doing asset, and preparing all the report that you need to prepare. Now, why is this important for us? This is important because we have come to that point where our thoughts of why Nigerians need technologies that are built by Nigerians for Nigeria, especially by accountants that know the reasons why technology are being built. I think we'll be talking more about that as we go into this webinar today. And you see why we invested time and energy and resources into building solutions like 3-4 years ago. Now, what we will be talking about today, the first thing that we'll be looking at is that I'll be giving an overview of the changes in the Nigerian tax law and what it actually means. And then following that, we'll also be looking at those changes that every business owner needs to be aware. Then we're talking of how business structure will be affecting your tax strategy. And then we'll also be talking of those technology every business needs to adopt to be compliant. And then we'll also be reviewing those compliance checklists that you need to review as we go on in this new era of tax. After that, then we can go into the question and answer, and we call it a day. Now, this webinar is basically targeted towards business owners. So I'm not going to be using any jargons or technical terms. I'll be breaking it down. And like I said, the way we have also structured the webinar is that when we're treating a matter, we will also be doing the FAQ, the common questions people are asking concerning this particular matter that we'll be discussing based on what we've read in social media, on LinkedIn, because at the moment, everybody has become a tax consultant. Even people that don't have the practical experiences in it have become tax consultants. So we'll be making sure that we deal with every issue as we go on. So first and foremost, what is that thing that really changed? I must first explain that since Nigerians' independence and we've started things of tax in Nigeria, this is the most comprehensive tax review that Nigeria has ever done. Now, it was needed, it was important, and it was timely. Because if we want to move Nigeria to the next level we are all been clamoring to move it to, it's important that our tax structure actually reflects our vision. And that's what this administration has done. And what have they also done? Because if you go back in time in the way the tax was actually structured, we had a lot of tax laws, fragmented pockets of it everywhere. In fact, we had tax laws that we actually inherited from the colonial regimes that we carried on. For example, I'm sure most of you followed the matter when FCT tried to enforce radio and TV license in Abuja. The truth of the matter is that that is actually a law, a tax law that has been in existence since 1952. And we did not change it because at that time, in those days, people having radio and televisions were considered rich people. So it was a luxury tax, so to say, that was imposed on the, should we say, 1% of the society to be able to fund education and fund all those things. But somehow those laws were left in our laws. And, as they say, if a law is not repealed, no matter how long it stays, it's still a law. And what we have now done in Nigeria is that we've looked at all those legacy issues. We try to review the entire structure of the tax of Nigeria and made this radical and comprehensive change. So the first thing we did was that we brought together a new tax law. The Tax Act of 2025 brings all the fragmented and pockets of taxes into one book. Because, for example, before, if you want to reference or talk about tax, you need to take different tax laws and the amendment separately to be able to reference a particular tax law. But now everything is under one tax law. We repeal those ones that are not necessary, remove the ones that are not necessary, repeal them, and then updated the ones that are necessary, change them where it is needed, and make them more progressive and also in line with the modern realities. Because if, as you're aware, those days the economy and the situations are different, the way people do businesses are different, the realities, the modern realities are actually different as of today. So what did we do? We did this. Number one is that, what are the laws? We changed the entire law, made them into one, and then made them more relevant, and then change the person that is supposed to enforce these laws, which is formerly known as Federal Revenue Service, is now being changed to Nigerian Revenue Service. They are to now be in charge of the federal government revenue collection. Now, we also changed the way law is administered, the tax is administered in Nigeria using the Tax Administration Act of 2025, meaning that we change everything relating to how tax is going to be administered, to record keeping, how we can file. Because, for example, previously there is no provision for electronic filing, and those are the things that have not been implemented. And there is also the Joint Revenue Board Act, where the law is to help every state establish a properly independent revenue collection and provide a platform for Nigerian FIRS, or let me say revenue service, and the various state and revenue service to have harmonization and collaboration. This is to help us to remove issues like double taxation. And that's one of the fundamentals that this law is bringing. The vision behind it is to have a single window where taxes are managed in Nigeria, meaning that if you are dealing with Ogun State and you have a cost to deal with Enugu State, you don't need to replicate or pay another taxes in there. There will be a shared platform where taxes will be monitored and managed. And we'll be talking more about that as we go on in this webinar. So why are we doing that in Nigeria? Why are we doing it? Now, it's important that you understand that this is a global thing. The driving force for this is that Nigeria is even starting very late. Most of the international countries, a lot of the developed economy and developing economy, they are coming together to form a global network when taxes can be managed. And that's why we have things like the OECD initiative. The idea is because also digital economy actually, should I say, exploded. You can actually live in Nigeria and earn all your money in the UK. And if you are kind of left outside the digital tax economy, you may end up not paying taxes in anywhere in the world. And those are the kind of things that this reform is trying to ensure that it's also done in line with international practice. It's also trying to make sure that governance is now more data driven than before, because what we used to have before is that we have silos of data. Now is to bring this data together internationally so that people can get the best. I mean, the government can get the best of it and reduce evasion, even reduce terrorism, because one of the things that we must understand is that terrorism thrives where people resources cannot really be traced. They can therefore use to fund illegal activities. Now, so Nigeria just catching up. I mean, others, even in Africa, other countries like Rwanda, South Africa, Kenya, they've actually aligned with this global initiative, aligned with data, all to promote transparency and ensure that we form a global standard and plug it into the digital infrastructure that it is in the world, so we are not left behind. I mean, we're always preaching and saying Nigeria should be the giant of Africa. So this is one of those things that Nigeria is doing to ensure that we get it right. But it also affords a lot of advantages for businesses that are doing international trade. For example, in Pillarcraft, we are a member of NTAA. If people want to do business in Nigeria, one of the things they want to know is how tax compliance, the partners they're trying to have in Nigeria are. At the moment, we usually do manual process, writing to FIRS to confirm if this particular partner that our international partner wants to do business with in Nigeria, or are they compliant to date, or when an international partner wants to buy off a business in Nigeria, to do the due diligence, you need to write to FIRS. I mean, once this thing is done, it means that it's easy for either us or the international partner to review how the compliant the company or the business or partner is. That also avails Nigerian businesses or persons want to do business with anybody outside Nigeria, a platform to do their due diligence on this person, so that issues of fraud, scamming is also reducing. Now, there is a lot of changes that are in the new law. There are a lot of changes. I won't want to go into a lot of, some of them are very technical, but there are these major 6 that I think you should be aware. I know you should be aware as a business owner for you to get by as we go on. Now, this webinar is not to transform you to an expert in tax, is to make you become aware, especially when you engage tax practitioner, or you engage your in-house accountant, or you engage people, so that you are aware. Like I say, ignorance of the law is not an excuse. You are aware of those issues that relates to you and those care that you must take. We'll be taking them one after the other, but generally, one is that the issue of tax ID, fiscalization and real-time VAT and invoicing, how we have expanded the scope of digital tax to digital, virtual and non-resident transaction, how this also has brought in a centralized and informed tax framework, and the new penalties and transparency that FIRS, the general tax framework in Nigeria, is now building. And one of the main other issue will be the issue of personal income taxes that we'll be talking about. So let me take these issues one after the other. Please, as I go on, like we said, if you have any question, please put your question in our chat box, and we'll do justice to it when we finish this presentation. Now, I'm sure earlier this year, immediately the tax law was passed. One of the major discussion that ruled the social media space, or basically that became the general dialogue and in discourse, was that without TIN number can you operate your bank account in January? And there's been a lot of clarification concerning that. However, this is actually what it is. That as a business owner, you must have a TIN number. Now, how is this working? Now, it's either you're registered as an enterprise or you're registered as a company. If you are registered as an enterprise, what the new tax structure is trying to do in the new digital economy is that your transaction will be tied to your NIN number. That's your national identity number, NIN number, while your business will be tied to your company. Now, that means if you have a company, you are going to have two basically TIN. If you have just one company, you are going to have a TIN that is tied to your NIN, which is your personal one, and you are going to have another TIN that is tied to your company based on the company's CAC. What is going to happen, what we see and we know is going to happen, is that government will force big banks to force people that have bank accounts to give TIN number, update their bank account so that their TIN numbers are attached to their bank account. That is what is going to happen. So banks will not be, your account may not be closed, but you'll be forced to attach a TIN number to your either personal account or your company account in your name that you are tied to. Now, what does this mean? It means that you must register for TIN number. Now, at the moment, everybody is supposed to have a TIN number, like I explained, either as an individual or as a company. So either you are running an NGO, you are a freelancer, you are a business owner, you must register to get a TIN number. Now, how do you get it? If you are registered your business as an enterprise, go to any of your state and revenue services with your NIN number, which is your national identity number. They will be able to register and give you a TIN from that state. If you are registered in Lagos, for example, go to LIRS. If you are living, not registered, living in Abuja, go to FCIT. If you are living in Enugu State, go to Enugu State Internal Revenue Services, and they will issue you a NIN. However, if your business is registered as a company, go to the nearest FIRS office, or as it's going to be in January, NIRS office, with the copy of your certificate and get registered. And usually, if your business is registered post 2022 or so, you will have a default TIN number at the bottom of your company incorporation certificate. But if it's not there, go to any of the tax offices to confirm. Now, we'll be sharing a link with you. My partner will share the link on the chat, where you can, in case you already have a company registration document, where you can confirm your TIN number. It's called the FRS TIN verification site. My partner will share it on the site, on the chat box. You can actually go there and verify what your TIN, in case you don't know what your TIN is. You can go there and verify your TIN. Now, what will happen is that as we go forward, your TIN number is expected to be displayed on any invoice you issued and any receipt that you gave. In any contract between two parties, it is expected that their TIN number, either if they are registered as enterprise or as a company, shows on it, and in any official corresponding bank transactions and banking. So what we are going to be seeing is that as we go into 2026, when you print out your bank statement, we expect to see your account number, your name of your company or personal name, and at the bottom of it or next to it or whatever, after your address or whatever it is, they are going to have your TIN number there. So that as it is also, the embassy can also, in case you're applying for visa, they can actually verify if you are a law-abiding citizen. So that is number one change that has happened. Everybody must have a TIN number, either as an enterprise or as a company. Two is that there is now one of the most innovative things that FRS is trying to do now, called digital fiscalization. And this is important because it affects the way VAT will now be reported, especially when it comes to anybody issuing invoices. Now, so what is digital fiscalization? One of the things that is set to validate transactions, especially when we're doing VAT in Nigeria, is that for every seller, there is a buyer. And for every buyer that issued an invoice, most times, whatever you are buying, you have what we call input VAT. And then the seller also have what we call output VAT. Now, they usually, sometimes the claim is that there are discrepancies. Either people refuses to pay the VAT or they don't even charge VAT on it. What FRS wants to do is that, number one, they want to make sure that every business runs on an electronic platform, meaning that for the minimum going forward, you need an e-invoicing. You need an electronic invoice that will now be connected to FIRS. Once you issue invoice to anybody, what happens behind the scene is that before that invoice is validated by the person that is buying from you, it's going to route to FIRS, their database, to confirm what you are charging as VAT, and then to validate it, so that if that buyer presents that invoice anywhere, the input VAT is claimable. However, there's still a lot of things that are going on concerning that. Part of what is now supposed to happen is that VAT remittances now becomes digital. We don't need to be, if you are familiar to the system now, we do our remittances online using Tax Pro Max, but there is submission returns that we normally will go into Tax Pro Max to file. Hopefully, by the time this is done, because it's at the infancy stage at the moment, FIRS is enforcing on the large taxpayer, that is businesses with 5 billion turnover and above. In fact, 1st of November was their deadline, and they were expected to have connected their system to FIRS to be able to start doing their e-invoicing. Now, there is one of the, should I say, misconception that people get. There's a difference between fiscalization or POSs. Now, for businesses that are into retail, and I'm sure if you have shopped in ShopRite in the past, there was a time that ShopRite was used as a test. When you go to ShopRite, you notice that when they print invoices for you, there is a QR code that you can actually scan to show that that transaction was authentic. That is what we now want to implement for all the retail outlets, all the businesses that are FMCGs that are doing a cash and carry, so restaurants, retail, hotels, and all that. It means that once you go and they are connected to FIRS, you'll be able to validate your invoices as you go. All this is to create transparency and to help the digital economy that Nigeria is building. Now, what are those essential things that has happened? Number one, that we need to mention, like I said, the idea is that as we're going into this, I'm also explaining those matters that are coming up. VAT has not changed. We have not changed the VAT rate. However, there's been some classification under VAT. Since we are talking of fiscalization, there are things that were tax exempted before that are now being reclassified as zero tax, zero rated VAT. What does that mean? Essentially, it means that if you actually dealt in anything that is zero rated VAT as an input, government will refund the money to you, and at the moment, the idea is that government will refund the money in 30 days after application. In 30 days after application, and the transaction must have been done in maximum of 1 year before you make application. This is why your system must be such that it allows you to understand or reclassify transactions that were initially exempted that are now zero rated, or they were zero rated and now exempted. All this is what you need to discuss with your accountant to see, especially if you're already using a software to manage your accounting or your VAT computation, to be able to understand how this affects your operation. Now, so one of the changes that is already, the change number 3 that was also made, is that Nigeria has now moved into digital and cross-border taxation. Now, what does that mean? Before now, if you earn your money in let's say in the UK, Canada, and all those things, you could argue that you are not obliged to report it in Nigeria. But as it is now, Nigeria is now running what we can call a 360 tax, meaning that you must declare your tax on every transaction. Secondly, taxes has now extended to digital platforms, right? For example, digital assets, those are involved in Bitcoin, that are involved in those kind of assets, they are now being taxable. That is where the issue of also, if you are not resident, you must have seen it now. If you are doing things like Netflix, sometimes they will ask for your TIN number when you're about to pay your invoice on Netflix. The idea is that Netflix also, or any of those digital platforms, are to pay tax, though they are not resident in Nigeria. They are also to pay those taxes in Nigeria. And then the marketplaces, as they are evolving, tax across border is going to be very rampant now. So it means that if you are dealing with anybody, even outside the country, be aware that the fact that not resident in Nigeria does not mean they are not liable to taxes in Nigeria. Or if you are resident in Nigeria, or you're a Nigerian and you earn outside Nigeria, it also means that the amount you earn outside Nigeria is taxable in applies when you are talking, when we get to the place when we're talking of the tax returns and all whatnot. Now, what is the change number 4? No, one of the changes that has now been made is that the government across the level is now becoming unified. That is why they are pushing what we can call single window tax system, meaning that when you are dealing with all the states of the federation and FIRS or NIRS that it sees, you are dealing with one entity. So it means that you cannot escape taxes, because again, like we noted, your NIN is the true source of information as far as that NIN remains the same, because your NIN is tied to your BVN is tied to your bank account and all that. And they are going to have a digital footprint of you across all levels of government. So you can leave Abuja and claim to your state, another state, to say you are not earning any money. That they can actually verify to confirm how are you doing in terms of earnings in that particular year. Now, one of the other things that you must be aware that has really changed is in terms of penalties. Now, and the penalty has also, gone beyond what we used to be. Now there's issues about making some things criminal in nature. What used to be just what we can say fines before are now criminal in nature. Asset seizures, right to close bank account, and all those have now been added to those fines, penalties in the new tax law. So it's important that you are aware for those things that you could say, oh, it's not a big issue before, is now bigger. Even the amount that is being charged for, let's say, non-compliance is now harder. We will be sharing a detailed list of fines, penalties, and all that after in your emails for you to have a view. For example, if you are not filing an annual return, what will be the implication? If you are not filing a financial, what would be the implication? You want to tell me something?
No, go ahead.
Okay. All right. So now the number 6 change, and this one is one of those ones that I could say it's easy for business owners to fall prey of. Now, personal income tax has changed. Payroll has changed. What has changed? Number one is that most times people talk more concerning the minimum tax and the relief and all that. But there is a particular thing that has happened now because everybody should have a TIN number. It means that you need to ensure that all your staff have TIN numbers, meaning that you need to update your payroll solution to also ensure that you collect the TIN numbers for every staff. You know, some of the states used to allow people to file on what we call temporary TIN number. No, that will not be what the going forward will be. The TIN number for all the staff must be attached, must be linked to their NIN number, national identity number. So every employee must also file an annual return. So there is a returns you are filing for now, which is a PAYE. Every employee and director, business owner must file a return. And we were talking about when you are looking at one of the issues that people have been talking about, should we register a company or should we migrate our business to a company, and what is the implication of it? So it means that as we go forward, digital filing will become very, very will be more common, and then director's liability will be, because some of the things that has now been done is that rather than making some issues a general liability, is now being made the liability of the directors of the company or the business owner, and we'll talk of one of them. Now, one of the things that has changed in the new law is that there's now what we call rent relief. Before now, we were what we call consolidated revenue and consolidated relief allowance, which is where we do 20% of an amount and allow people to benefit on it. This rent relief means the law is that before you grant your employee a rent relief, they must show evidence that that amount was paid. That also now bring a compliance, should I say, governance and compliance issue on the business owner. It means that you must ensure that your employees do not bring in, should we say, forged rent that they paid. But there's still a lot of other issues operationally, or should we say in real life, or that we think that the inland revenue services will still come up with the modality of doing it, because there are complications that I don't think was thought of before this was done, but maybe we will be more enlightened as we go on. One of them is, for example, number one, note that the rule says that before you grant somebody that rent allowance, the person must have paid. However, we compute taxes, especially PAYE, on an annual basis. That means we compute them based on its futuristic, while the rent issue is based on what must have happened. That's number one. Number two, and there's a cap to it, the cap is 500,000, per annum. Now, if, for example, somebody was paying 200,000 naira rent in a particular year, and then goes to, let's say, pay 200,000 rent last year, and then goes on in the middle of the year, which is rent is due in June, and pays 500,000 as rent, he's supposed to take the max, which is the 500,000, of it. Now, how do we determine, or do we prorate it? Because he didn't tell the office that he's going to change his accommodation, but he has not changed his accommodation. So there's a lot of practical implications that I believe strongly, that there will be a guideline that will be issued by the various state and universities, or maybe by FRS himself, to explain how this will be applied in principle, in practice. Because, for example, I don't think anybody will start calling the estate agent to confirm if the rent that is being brought by your staff is actually genuine or not. Those kind of burdens. How do we even manage the cost of doing that? Now, what has also changed, but what that means also, sorry, before I go ahead, what that means also is that business owners must take pain to also keep the documentation of the rent that their staff has actually paid as part of the documentation of their staff. So it means that every employee must bring forth the evidences of their rent paid, and the business must keep it, because that will form what the various service will be coming into audits vis-a-vis the computation of PAYE as we go on in 2027. Because what happens is that they may not look at it in 2026. By the time we're doing auditing in 2027, those matters will now become an issue. Now, what has also changed is that our PAYE computation has changed. And one of the most, because I've done this training for businesses, on their own, and one of the misconceptions people are having when they hear this thing is, when they hear this 800,000, that some people think the 800,000 is per month. No, the 800,000 is actually per annum. How much because we do PAYE computation on annual basis. So people that are exempted from paying PAYE are basically people that are slightly below 66,000 naira per month. Anybody earning above that will fall into a PAYE group, a band, one way or the other. So note that the amount is annualized. We compute PAYE based on annual basis, and that 800 you see is, if you multiply the total amount being paid in salary by 12, that is when you can now subtract the 800,000, and others are charged on taxes based on the various band that they fall. Like I said, this is not a technical class, it's just so that you are aware. So what do you need to be aware? You need to be aware that tax computation will change in January 1st, meaning that you need to sit down with your accountant or whoever is providing you payroll services to ensure that they take this into consideration, and taxes are recomputed by 1st of January, so that staff are not, should we say, overcharged, and taxes are not over-remitted. Now, those are the 6 major changes that have happened. However, one of the areas that should I say, generated a lot of debates, which I must talk about in this webinar, is the issue of tax exemption. Now, one of the things that has happened is that I've seen a lot of people saying that, the new law does not, you should not pay taxes if you have turnover under 100 million and asset less than 250 million. Therefore, if you have a enterprise, please quickly go and register into a company to avoid tax. I will explain that. Before I go on, there is also another issue that people are getting mixed up, which is the issue of 50 million naira and 100 million, both referring to what is termed small businesses. To the matter that these two figures appeared in two places in the tax law. One appeared in the tax law and one appeared in the administration law. Now, the 50 million relate to businesses, relate to what is termed small businesses that should not file VAT, that are exempted from VAT filing or charging VAT. And the rule of thumb is this: if you don't want to file VAT, if your turnover in a year is less than 50 million, do not in any way charge VAT in your invoices. The moment you charge VAT in your invoices and do not remit is a criminal act. So while you check that your turnover is less than 50 million, also ensure that you do not charge VAT. If you do charge VAT, please remit VAT. That's why some small businesses, especially the ones that believe they will grow, usually will start off by really charging VAT, registering for VAT, and be charging the VAT, because if you cross the threshold within the year, you may run into issues, especially when you've not been charging get-go. Excuse me. Now, let's now talk of the issue of 100 million. Where that 100 million is coming from is in the Company Income Tax Act. The law says that if your turnover in a year is less than 100 million, and please underline the word and, your asset is less than 250 million, you qualify not to pay any form of taxes. You will not pay any capital gain. You will not pay 4% development levy. And what is that 4% development levy? Before now, also, we had a lot of charges that we charge: police fund, education tax fund, all these other funds that you charge variously at various purposes, at various part of tax computation, which has also now been harmonized. So the question is it worth it for me to migrate my company from enterprise to a company? Now, I would say it's very tricky, but you must understand this, because people generally say that, oh, we want to migrate, we're not paying any taxes. I agree, we will not pay tax as a company, but the directors must pay tax, except they carefully only pay themselves the salaries that they will pay PAYE on. Any amount of money beyond that salary that is straight to the directors, tax can be charged on it. So it is not a what you can talk as if it's just a one silver bullet. Once I migrate, I'm evading tax. You as an individual, you have not actually escaped tax. So there must be a careful plan in such a way that, number one, is that it's either you establish a salary for yourself and keep all the dividend of your businesses in your business, or if you are going to take any dividend, I know the dividends will be charged at a particular 10% and all that. But if you are not careful, if you don't manage very well, you may end up paying more taxes than the person that has an enterprise, because that person that has an enterprise, yes, will be charged based on the total profit that will not be based on various band, and may end up paying about 25% of his income as taxes. While, yes, you that are paid PAYE may are paying about less than that. But if you are not careful in managing transactions, you may run into issues also. So what does that mean? It means that you must carefully review your situation and how this will affect you, rather than taking it as a silver bullet to say, once I migrate my business into company, I evade, or let me say, I avoid all the taxes that are applicable. it is not also. And there's also how you need to keep monitoring to know when how you manage your transaction. So this is basically tax planning that we encourage everybody, every business owner, to get into. Now, as we go forward in the new tax, there are some technology that you must adopt to get by. Number one, like I said, you need to start looking quickly into getting any accounting ledger. Move away from using your pen and papers, your spreadsheet, and all that, especially because you will need to start implementing physicalization of your invoices with FRS. Now they are at the point of doing the large taxpayers. Definitely in 2026, they are going to come down to start doing those also for the small businesses. So it's important that you are proactive and you are set up so that whenever the go button is set, you know that you are prepared and ready to go. Also, try to look for payroll solutions that will allow you manage transactions online. The same thing for VAT. Like I said, that also ties to the bookkeeping, that you have a system invoicing, a electronic invoicing system that allows you to manage your transaction properly. One of the other things that is important that you look at now is how do you store your transactions in terms of books, paperwork, and all that. Now, the law is clear. 6 years after transaction, you must maintain the books for those transactions. So we usually would advise, actually, Google is free. You can actually set up a Google Drive to keep your records. You can be online storage solutions that can manage your transactions or your books, and then you're able to keep your document remotely whenever you are being asked for it. It's easy to just download and use it. Now, going forward, there will be a lot of states will start bringing out things that will allow us to do e-filing with the new law, with the new platform, the new share platform they are doing. So it's better that you are ready, you adopt minimum a ledger technology, a cloud accounting software. Usawa is there for you to choose and use, and we're even building the version 2 of Usawa to allow direct integration into e-invoicing platform of FRS. So what are those compliance things that you must do going forward to 2026? Number one is that you must verify all TIN numbers, both your suppliers, your partners, your vendors, your customers, your vendors, suppliers, and your staff. Make sure that everybody's TIN number is stored, is part of their record. Also start adopting a ledger, an accounting ledger that helps you in areas of connecting to the invoicing. The invoicing is not about will it happen, it's just about when. And we're certain once they are done with the experiences and the lessons they are learning from the large tax business owners, they are going to come down to medium and small businesses, I'm sure, within the next time limit. We're also seeing how it's been done in other clients, and we see the timeline they've been given. Now, start looking at what will help you to recompute your PAYE. If you are not using the payroll software, there are people who have started releasing Excel templates that allows you to recompute the payroll software. But like I mentioned, one of the major things you also need to look out for is that you need to look out for how do you keep the evidences of rents from your staff as we go toward 2026. Also, you must make sure that you start keeping digital records of your transactions, your third-party document form. You can use Google Drive. There's a lot of resources, online storage that you may need to start using to help you manage those as we go on. Now, filing return digitally will become And then you must start training yourself as we go on to how this is going to pan out for your business. Train your staff, especially if you have staff that are not, should we take tech compliance, so that they can also help you. And that can also help you in terms of how these things are managed. And I will advise that even you may not think it's the best, I mean, you may not actually have one before, start thinking of engaging a tax practitioner. This is not a period where you go by just walking through the dark. Engage a tax practitioner that can advise you. Make sure they are experienced in your sector, they are experienced in how you do transaction, so that they can also help you in terms of how you manage and how you become compliant in 2026. I will advise you find a tax practitioner that is also a bit tech friendly, so that they are not going to be advising you to be using Excel, to be using those things that should I say will be cumbersome for you. So find a tech-friendly businesses. Now, how can we help you in Pillarcraft? Like we said, we can help you in a lot of ways. We can help in terms of verification of TIN. We are already implementing, we are developing a e-invoicing software called Usawa Connect that is going to connect either directly your ERP, invoicing software, accounting software to FIRS, connect remotely, either directly to us or you directly to FIRS, whichever one is a middleware that instead of you abandoning whatever legacy software you are using, is just to connect to that software, and that software we connect to FIRS. We provide outsource and payroll solutions, so we can actually help you ensure that you are ready for 2026. We can also help you form a strategy on how to keep your record on those digital platforms, and also train you when it comes to e-filing and all that. And if you want to engage us as your tax practitioner, we are ready. We will help you to make sure that you are compliant as you go. Now, one of the things that we will be offering is that we are offering everybody on this webinar a free review of your system. It's free. I'm going to be sharing the QR code for you to be able to book a session with me, where it's going to be a tailor-made session where we review, we have a talk with you, we have a checklist, a questionnaire that you fill, where we now be able to tell you, do a bit of gap analysis for you and advise you on the way forward to ensure that you are ready for 2026. We will also be doing a bit of masterclass for those that want to have in-depth knowledge into how this new tax law affects their businesses, affect them as a business owner. We are even already considering talking to various sector leaders, because we believe that when it comes to taxes, it's important, just like we will operate in Pillarcraft and Bayode Agbi and Co., that you take advices on people that have experience in how transactions are managed in your sector. For example, if you are in real estate sector, the way the tax will affect you is different from a professional. The same thing is ways is different from a retail business. For example, we have talked of we have talked now concerning small businesses not paying taxes once they register and all that, and they have 100 million turnover. That does not apply to professional practices, lawyers, quantity surveyors, estate agents. It doesn't apply to you. The law, the way it applies is actually different. Because the way you are set up is also different. And so it means that the way the tax will affect a quantity surveyor or a lawyer will be different from how it will affect anybody that is into retail and all that. So this brings me to the end of the presentation. Like I said, the plan is to keep it within the 1 hour mark, and I think we're able to do that within 1 hour. So we will attend to the questions that we have now and see how we can go. But like I said, if you want to book the time, You can scan this QR code. It will take you to the link where you can actually book a free time to have a review of your business. Runke, what questions do we have?
All right, so thank you very much. So the first question we have, it said, how does the tax law affect pensioners who have a business that supplements their pension?
How does the tax law affect pensioners?
Affect pensioners who have a business that supplements their pension.
So number one is that you are not looked at as a pensioner when it comes to business. So there's not that dichotomy is not there that you're a pensioner. What is looked at is basically your business and how it's operating. How is it set up? Is it set up as a company or is it set up as an enterprise? However it is set up is how the FRS or your state NIMSM will deal with you, basically. I hope I answered that question. We can. Any other question, okay? Have we answered all the other questions?
So there's another one from Eitayo OO. We're a tech setup company based in Abuja. Pre-revenue, all of our fundings has been from our investors, the funder. We have expanded over 50 million this year. Will we be paying any tax? I mean, apart from paying.
No. So now this is where a proper accounting setup is important, especially when it comes to startups. As a startup, when you use the word that you have, okay, I see you say you say pre-revenue. All your fundings are investment. They are capital investment. They are not yet any form of, should I say, revenue. So you have not even started to count revenue, meaning that you don't have any revenue to be taxed on. So it's important that you properly set up your system in a way that it captures and differentiates, distinguishes between what is investment and what is revenue. And that's why accounting for your business is very, especially at the startup case, at the startup stage. In fact, let me also quickly share this when it comes to startup. One of the things that has now been added to the new tax law, which is wonderful, is that now startup, the pre-incorporation expenses, which used to be disallowed before, are now allowed, but is allowed at the first year of commencement of business. So, meaning that you can actually write off whatever expenses that you must have been incurred before you kind of started generating revenue. And I like the way you noted it, while you are even at the pre-stage, the pre-revenue stage, paying PAYE withholding taxes is still mandatory. So you must make sure that you have your system to do that, to pay those things as we go on. And then I see a question. I believe that airline to pay commission to travel agent, right? Okay, this says, good morning, sir. I believe that airline will pay commission to travel agent, deduct withholding tax, and thereby remit VAT. Our travel agents will report this VAT as well. For tickets with zero commission, travel agent charges, I think I can't get this, for tickets of zero commission. Travel agents charges service fee. Are they to pay VAT on service fee? Now, you have to pay VAT on your service fee. Usually, you are not to pay VAT on the commission. Commission is revenue that supposedly is part of the cost of your whatever is paying you. So again, I understand, because we've dealt with defendants on travel agents in the past where the classification of which commission how it's done is based on the partnership that is signed with the airline agency. But usually, commission that is being paid is a commission. Therefore, VAT cannot be charged on it. But withholding tax will have been charged as source. However, you must declare that as you are filing your income. But every time you do service charge should have VAT charged on them. The next question will, The next question is that will the 500K be paid to the staff outside payroll? No, it's only staff within the payroll. Within the payroll, only staff within the payroll. And like I said, before that amount can be paid, there must be evidence that the staff paid that rent. So they need to give you a receipt to show that that rent was paid. You can't just grant the staff the rent without getting those evidences secured to you, or else you may have gone beyond what the law is saying. And then another person, Olori Olubimi, says, anytime I receive 20 million and above, LRS sends me letter. So I'm sure LRS is doing a bank verification, because what most Inland Revenue Service do now is that they have a kind of intelligence relationship with the bank where they see transactions. And one of the things you must understand is that the law says that you must file your annual return. If you do not file that annual return, the state is at liberty to send you what we call best of judgment. So the letter you are receiving is based on what they have seen in your account, and they are giving you best of judgment. But the best thing to do is for you to declare your income and also declare what we call allowable expenses, because some expenses you are allowed to incur as part of your runnings. Do you understand? So, for example, you renovation your house, even though you earned 100 million, you actually did renovation and is allowed. Do you understand? So it's very important that everyone form, and that's one of the things that this new tax law wants to do, so that everybody forms the habit of filing their annual returns. And then another question from I can see Oluwanishola Kazim. Would this be included in salary or as a separate benefit to staff? I believe you are speaking concerning the 500,000 rent relief. The relief is a relief, is to reduce the taxes you have to pay to government. So it's not going to be paid to you, it's going to be used to reduce your salary. So assuming your salary is 1 million naira a month, and your tax was computed to be, say, 250,000 naira a month, just an hypothetical example. But once the rent relief is now added, let's assume you have to get the 500,000, which is the maximum amount in the year. It means that your rent will be reduced by 500,000. That's about 36,000 naira thereabout. From that 250, meaning that rather than you paying 250,000 to government, you're paying 250 less that 36,000 naira to government. That's the essence of the relief, and that's the purpose of it. I have people raising their hands, but let me see if I can. There's another question. Good afternoon. How does this is from Loretta. Good afternoon. How does the tax revenue reform affect enterprise? How much tax are they meant to pay since there's already a clear explanation for small companies? If the enterprise charges VAT, is there an additional tax they must pay? So you must understand first that there are different taxes. VAT is what you charge on value adding. Like I said, if your business, either enterprise or company, does turnover above 50 million a year, you have to charge VAT on your invoices. If that enterprise or company does turnover below 50 million a year, you are not required to charge VAT on your invoice. But remember the proviso I said, if you do charge VAT, you must remit VAT. Now, VAT is not your income tax. For company pay what we call company income tax. For personal person or enterprise, you pay what they call personal income tax. So VAT is different. Once you are doing business, you make revenue, which is that 100 million, say, for example. Let's use the case of 100 million for a company, 100 million for an enterprise. You make 100 million as a company. What this law is saying now is that once you are doing below 100 million and your asset is less than 250 million, you don't need to pay any company income tax. However, the person that owns that enterprise is still expected to file a return. That return will show the total amount of money, which is 100 million, less the what we call the allowable expenses. Whatever expenses you incur to generate that is also allowable. The balance is what you are now going to pay taxes on based on the band that you saw, that one of 800,000, 3 million, thereabout. And then based on that, you pay what we call the personal income tax. Personal income tax is paid by everybody, both the directors of the company and everybody. Even the way the law is going, even if you're an housewife, you have to file your personal income return, only declare that you have zero revenue and you pay no taxes, or you are earning less than 800,000 in terms of taxes in a year. I hope that answers that question. We've gone over our time, and I want to thank everybody that actually showed up for this webinar. I really appreciate. I hope we have been able to give explanation to most of those.
We have 2 hands raised.
Oh, 2 hands raised. Okay. I see the hands of Olori Olubimi. Okay, let me give Olori Olubimi. I hope I answered your question, but let me allow you to speak if there are more questions you want to ask. Olori Olubimi, can you hear me? And unmute yourself and speak.
Yes, you can talk now.
Olori Olubimi, are you there? Okay, I think I see another hand up. Onyi Juliet. I hope I got the name pronunciation correct. Also, please, you can also unmute yourself if you have any other question to ask. Can you hear us? Okay.
I guess the questions have been answered.
Okay. Okay. Thank you very much for your time. We really appreciate you joining us in this meeting. Like we said at the beginning of this webinar, this webinar is recorded. If you want to go over some of the things we mentioned in this webinar, we will share it on demand, and you can actually go there and watch it and maybe share with people that you feel that will need it. And if there's anything that we want to also share, we'll be sharing with you in your email. If there's anything that we want you to know. And like we said, we'll keep this webinar going. So we'll also be sharing with you our next webinar, which will be in the first week of December, to still go on the issues of the new tax law and how to get businesses ready for 2026. So on this note, I want to thank everybody. I want to thank Runke, my colleague, for helping us mediate in this on this call, and everybody that have joined. God bless you, and see you some other time.